Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves just one question: what happened today, and what does it tell us about the coming days? I do a show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. You can catch it there. Subscribe to it up on the right-hand side. Just click on it, subscribe to it. Anytime we push content, you'll be notified. Makes it nice and easy for you to stay up to date with us. Let's take a look at what happened in these markets today. We were pretty much green across the board. Not a lot, and actually I've got this out of order, so we're going to have to kind of look at it a little bit closer, more closely. So NDX and Composite were leading the way up. The Russell was also up there, but we actually were slightly down on the S&P and on the industrials, down 44.25%. Silver down, gold down. The dollar, I believe the dollar was actually up, yep, slightly up. And oil down. Now oil was down big and reversed and came back. So oil actually did pretty good on the day considering all. When we look at the markets and we start with the S&P 500, it's 3 days now, pretty much a little tight consolidation up here. And what is that consolidation doing? Well, it's testing. It's testing this high. It keeps coming back into it each day, gaps down into it, or actually pushes down into it, and then reverses and holds. Volumes tailing off while it's trying to break it down. It's not breaking it down, folks. And if you go against the bar on the breakout here, volumes there bigger than the volumes trying to come back. There's no sellers as this thing comes back. This thing wants to go the other way. And you can kind of see that in a different way. If you step over here to the volatility index, you can see they keep coming down even though the S&P isn't going up. And that today, I believe, is probably indicating that we're going to see this S&P try to rise tomorrow. If we go elsewhere, we keep getting strength in technology. Another day up, finishes up an ABCD structure on the broad composite. That structure on the daily gets finished today. That's done. Now we're looking at what's going to drive this farther. I mean, what's going to take it higher? You've done your extension on the broad composite. You're more than done here on the NDX. Small caps, S&P, Dow, what's going to take it higher? I don't know. All I can see is that it doesn't want to come back in, which suggests that something's going to come along and push this thing higher. If we look over at the sectors, I've been looking for rotation. In particular, as you know, I've looked here in the industrials. Industrials push up to the highs today. At swing point high 57.73, we got up to 57.81. We go over it, back under it. We're doing 5.8 against 5.5. So we're just slightly less volume. That suggests that we're probably going to try to push it again, given that it's so close. The other place was the healthcare sector. Healthcare sector, that top there, it was going after 71.36, gets over it, stays over it, does 5.3, was doing 6.8 there, less volume. And if we go over to the very high, doing 5.9 over there, again, 5.3. The high over there, 71.43. We got as high as 71.55, closed at 43. We're on the cusp. This thing's trying to break out. It's right on the cusp. And part of what's driving this, of course, is what's been driving healthcare for a long time. That's the biotechs. You can see the biotechs get over the swing point high yesterday, extend today. No volume up here, folks, but there's no sellers. And it doesn't matter if you have less volume as long as there's fewer people that are trying to sell it to you. Price goes up. And that's what you're seeing here. We saw the SOX, which is also extended. It's already done its ABCD structure to the upside. We saw it push up, test again, but couldn't get over it. That SOX wants to consolidate or pull back. We don't know which one yet. There's that ABCD structure. It's already up there. It's tested this one, continues to test that. Wanting to get over the final swing point high right here. Can't quite do it, but it's hanging. Just like the rest of these indices and the sectors, it keeps hanging. IYT pushed higher today. Let's take a look at that one. That was actually one of the stronger ones all day. Oh, interesting. Gave it up at the end of the day. I didn't see that. 163.08 was the close. Got as high as 164.82. That test here was 164.32. Closes underneath it. Less volume. That's a failure. So the transports finally test the swing point high and fell. That's interesting. I did not see that at the end of the day. It must have sold off right after I quit watching at the end. Yeah, that's a clean failure. I was going to try to pull back. It's going to try to pull back now, and that's unfortunate because that was starting to shape up pretty decent. XLB, the materials, these guys just keep making new highs. They broke out on multiple time frames, and like the composite, they keep stretching. They've already finished their ABC. Actually, they didn't have one on the daily. They have it on the weekly. XLE sells off with oil today, but reverses and holds just like the oil did. If we pop over to the oil chart, you can see the same sort of action. Pushes down, pushes with volume, but holds and flips back around. These are all consolidating. I don't know if they're going to, come back deep yet. I suspect they will at some point. Right now, they're just consolidating, bouncing around. It's just a hard trade if you're going to try to trade those at this point in time. XLF pulling back in, going to probably come back and test the swing point high, a retest regen there. That would be the second attempt, 2406. Yeah, I probably will get there. So XLF not adding into it. We already seen the XLI. XLK doing the same thing the NASDAQ is, pushing higher after filling an ABCD structure as well. So you can see the indexes and the sectors that have led us up, right? They've done their part. Somebody else needs to step up to the table and do its part. And so far, we're not seeing that. And that's what needs to be seen. We're on the cusp in a couple areas with the the XLI and the XLV. We're overextended on the XLK. We're getting overextended on XLB. Also overextended on SOXX, the SOX, and also overextended on XLY, the consumer discretionary. So I'm suspecting, well, I shouldn't say this one's overextended. This one actually can move higher. Low here, 69. You take that one, that's about 430 or so, added 76, 77. So this one can actually extend another $1.50 or so. Utilities, let's look at that one. Utilities came back a little bit today, nothing special there. And the consumer staples also kind of consolidating. This group is struggling to get back up and test that high. It looks like it has a shot to get back up there, but it's just struggling on the way. Sectors potentially can help, but they haven't committed yet. We got to see XLI and XLV break out. Indexes, IndX, Composite, those guys have already made their move. Now you need to see the others make the move, and the question is, will they? If we look over at the AUX markets, because one of the things I keep watching is the bonds and the dollar, and the reason for that is if the dollar can just stabilize, it gives the market room to move higher, and that's what it's doing so far. But if bonds continue to sell off, then that would suggest that yes, this market can move higher on the back of a weaker bond. And right now, that bond is coming down to test again. So tomorrow we're going to probably test that low. There's some volume down there. I'm very curious to see if this sticks tomorrow, because if it does, it's not that the market won't trade higher if bonds quit going down. It's just that if the bonds do some sort of small retrace, up into this area, back into the top, or shall we say the bottom or the top of that bar, then that would just be consolidation after a fast straight move down, right? And then you could make the argument that this simply wants to come down, bounce, right, and then do another leg down, and that other leg down, if you pull over the weekly chart, would simply be getting back to the bottom of this bar. That's about 120.05. If we go back over here, you can see how that would get right into that area. So bonds, you know, I expect they're probably going to bounce in this area first and then try to make another move lower. But you know, the jury's out. If they do, that could be more of a consolidation in equities. If they just continue on down, equities probably are going to catch a bid as a result of that this time. Let's see here. Gold, silver, not really anything happening there. Those guys kind of, you know, try to do a bounce, really couldn't get anything going. And let's see what the FXE, FXY looks like. Nothing really there. And FXY, nothing there either. So nothing on those parts. So when we look at this market, you know, and we think about it, you know, and say, okay, you know, what's our final thought here tonight? You know, it's pretty simple. What we have is a market that has refused to sell back down. And if you think back about what has transpired so far, is that we have had plenty of bad news. I mean, I can only, you know, I mean, you can only look at this quote unquote good news so long. The good news is really central bankers. We saw it with our Fed minutes, we saw it with the ECB, we see it in Japan, we see it in China. It's really the central bankers that are flooding the market, doing the currency war thing, and that's keeping prices elevated because, you know, if there's more money out there, then it's going to take more of those monies to buy the same thing, or at least that's the thought, right? That translation, you know, is not quite exactly that. I think it's more of speculation with that excess money, more so than inflation of asset prices, because we don't see that inflation elsewhere. So that's the good part, right? The bad part is just about everything else. Greece, Ukraine, you know, Middle East. I mean, geopolitically, we're a mess. Inside the economic numbers, weaker pretty much everywhere we look. They continue to be weaker. They haven't changed. That's been going on for about 6 months now. Earnings not as good. They haven't been as good. They still aren't as good. And when we get out into April, May timeframe, I suspect those are going to struggle too. So everywhere we look, there's plenty of reasons to think this market wants to pull back, except for one. And the fundamental one, of course, is the central bankers. But the technical one is that as you come back and you test into an area that you have broken over and you are now paying higher prices than you ever have, yet you don't want to sell. There's no sellers. That tells you loud and clear that this market wants to find a reason to go higher. I don't know what it's going to be. I don't know how it's going to come about, but it just wants to find a reason to go higher. So that's where we end up tonight. That's kind of the final thought. And I don't have any subscriber or viewer questions tonight. So I guess I'll just turn it over to you and wish you a good weekend. It looks like we're going to get a lot of snow down here and deal with that. But have a great weekend. Make some money tomorrow. And I'll catch you next time. Have a good one, folks. Take care and good night.